due this week and where we are and what certain kind of aspects of suggestion, what the seasonal chart suggesting, what's the COT data suggesting, and what is the in the fundamental data suggesting. So let me just start by sharing my chart. And the first thing we really want to do is look at the US dollar. So let's have a look at the dollar index. Now you can pull this up, and I would encourage you to do so on TradingView. So this is the dollar index over the daily time frame, and it is following its seasonal pattern quite closely. So incidentally, guys, you guys got any questions or comments, then feel free to post them, and we'll get to them as we go. It's following its seasonal pattern relatively closely. It does suggest there's one more rally in the dollar, but you can see here on the daily charts that there is this distribution pattern going on where some of the bigger kind of institutes start to distribute their holdings, and it does look like that may well have happened. And there's a few kind of trend lines to watch out for here. So obviously there's this very, very steep one which has been broken. So the rally now is suggesting now this particular rally and this particular trend has been broken here. It's suggesting that something else is going on. There's a different phase going on, and the phase that we currently have is this strange little box where we see these peak highs. Looks like possibly an M topping pattern up here, but it does look like it's getting a bit toppy up here. There's this trend line along here, which has now been tested, and it's closed above. This suggests that we're not ready to break down yet. But as I say, the seasonal bias is for this to break down. So I would be looking for this particular price point, 105.50. And now that, as I say, you can find on TradingView. So TradingView's free software, and this is just another broker that I used to trade with. So they provide the dollar index, but you can't get it on JDR, I don't believe. But if you have a look on TradingView, you can see it. Now you want the dollar index because the dollar is really the kind of king player, and it does drive a lot of the sentiment in the market. And you can learn a lot just by looking at the dollar. You can learn a lot about gold, about oil, about indices, and a lot of the other currencies as well. So as the biggest player in the market, the biggest economy in the world, and the most open about its economy, i.e. there's lots of data to do with the US, it becomes really important to look at the dollar index every week. So you can see that this is going on here. There's also this other pattern here. Now, I'm not sure whether this is absolutely as tight as it could be. Let's have a look. That would put that there. Probably not. So we got something of a different kind of pattern going on here, where we got these lows here being kind of tested out. That break above there, actually, that's not too bad. Yeah, it looks like it's there. There's the pattern there. So you wouldn't look for anything really at this stage, because it looks like a move to the upside, only on the daily charts, but this looks like a move to the upside. It looks like we might well close this little gap that we've got going here. Then when we saw this this high test bar here, this inside body as well, you know. So there's a lot of negativity here. We saw the bears come in, push the price down. The bulls are having a rally, but look at their struggle. Look at the tails on these bars as they push up again. This hammer down here, or this low test bar, whichever you want to call it, was an obvious sign of potential reversal. Obviously, you never know what's going to happen, but that looked like potential reversal. And we did see some buying come back in, but it's been weak here, and it's been weak here. And then we just saw a decent boost up on Thursday that was actually caused, potentially anyway, by the Jerome Powell speech, where he did deliver something quite hawkish. Now, speeches do tend to have quite an emotive reaction, but it's when the data comes kind of back in again that we see things change. University of Michigan numbers came out pretty bleak, and right now what we've got is bad news for the dollar. But bad news is good news for indexes, and indices. So if it's bad news for the dollar, we can assume that things, as I say, like gold, maybe oil, but a bit of a difficult one. We'll talk about oil as well. And definitely the indexes are pretty good. So one more rally to the upside is suggested on the seasonal. So I'll be looking for one more rally to the upside in midweek. If it gets up to this point here at 106.42, then on the dollar index, then I'll be interested in seeing if there's a short on the dollar index, and a short on the dollar. Now that would suggest, if we look at the data which could drive that, and we bring it over here. Now, there's a bit of a problem with the COT data this week, because it hasn't been reported. However, last week we did actually see some distribution, maybe of some confidence in the dollar. So there are a few things pointing to some downside dollar, but it's just a bit early. It might be a week early, it might just be 3 days early. But if it's a week early, but we get a decent rally day 1 and 2, that does suggest that we may well have a decent place to try and short the dollar and buy up some other assets, and then we'll think about what those assets can be. So this is the data of this week. So we've got PPIs out of Japan. We've got a few speeches as well coming out, which really have jerked the market around quite a lot. Now, these crude oil inventories are going to be interesting, and the OPEC meeting. Now, there is an OPEC meeting. Here we go. OPEC monthly report. OPEC monthly report. Now, that happens on Monday, and that could boost oil. We'll have a look at that, but that could boost oil. Big problem with oil is that seasonally it does actually suggest a further dip to the downside before a rally. So I'm not hyper keen on a long on oil, but there are other mitigating circumstances with a thing going on in Russia potentially, and on obviously what's going on in the Middle East. So oil is going to be a tricky one to trade, and my personal view is I prefer to wish I were in than wish I were out. So I probably won't trade it. But if I had my kind of fingers to the coals, then I would probably be looking for some upside for the next few sessions at least. The problem with oil is because when the global economy starts to weaken, the demand for commodities like oil, that drive economies, tend to weaken. But you've got this geopolitical situation going on as well. And OPEC monthly report could be a driver, because obviously OPEC might bring in some measures that reduce supply enough to kind of meet just under demand, which will boost the price. So we've got to watch out for what's going on with oil. Okay, so we're really looking at what's the news and data for the dollar. CPI data from the dollar. Now, this is going to be on the Tuesday, 14th of November. Now, this is a definite driver. So even if this comes in and it's weaker than expected, and we see a dollar move down drastically, that would be okay to start looking at positions after that particular news event, because of what we've seen with the dollar. We'll go back to the chart in a minute. What else is it there this week, though, that could drive the dollar? CPIs from the pound as well. Core PPI. What's going on Thursday? Jobless claims. Now the jobs numbers are just front and center really, because of what's been going on with the economy. And then finally we get through Friday. Nothing on Friday, so the CPI data is the key. So we're potentially looking at positions after Tuesday. Now, if we or before Tuesday, if we get a decent rally and we get a decent setup, that there's always a possibility to enter before news, but only if you get a decent move higher first. Now, after the news, we might see a really big move down on a daily chart, but because of the rally in the dollar, it does suggest that it could come down quite hard. Now, the question then becomes, what do we trade it against? Now, if we look at WTI very quickly first, WTI is on a level of support. So we'd expect a technical bounce here, regardless of anything else. This is a trend line which has been drawn from the 4th of May. and it comes up to around about the 28th of June, and this is where we sit right now. Now, if we minimize this a little bit, yeah, it hasn't really got above there, but we can see that there's also, okay, let's blow it up and see what we got on the weekly. It's not too bad. Might be a little bit lower, but there's this little horizontal level here as well, which when we put it on the chart over here, you can see that there was some resistance there, and we are in that particular zone. Last week's bar wasn't particularly convincing, but there is a tail here. So we are seeing that the selling pressure is reducing. It is coming down a little bit. And then we see here a big move to the downside, another big move to the downside, and just this big attempt to get back up again, but it failed. But now we've got this move here. Now this is called a morning star. It's in fact traditionally you couldn't call it a morning star because this second bar would need to break out a little bit, but it would act like a morning star, which is a 3-bar pattern: push down, a hold, and a push back up again at least 2/3 into the open of the range of the first bar. So this is the morning star, and it's got to close 2/3 into that first range, and that's what it's done. So this would act as a morning star, suggesting some early upside with oil. And if you consider the OPEC meeting or the OPEC monthly report being a potential driver, this would suggest that there might well be some buying going into that, because this looks quite cheap. You know, if we sort of like think about support and resistance, are we on support or are we on resistance? If we're on support, it's a buy zone. So this is a buy zone right down here, and we've got a potential driver a day out. So on Monday, this is looking attractive, like a long. Whether you hold it, right the way through that meeting is going to be down to how you manage the trade after that. If the monthly report comes out and it's bullish for oil, it would be a shame to close the whole position. So really, you'd be really sort of after trying to do is hold right the way through the report with some of the position, but taking some profit before. So actually, that's on Monday. The report's out on Monday at midday UK time. So early doors, we might see a little push down again, and then possibly a push up. But if you don't, if you're not really too comfortable trading before the report, then you can wait after it. Now you have to be aware that it might well have gone. But if it has gone and it's in this area, all of a sudden becomes a sell zones, and then you can see what the report is and potentially sell it off, because seasonally oil is weak going into the next period. Now, what tends to be relatively strong in about mid-November, so we're not quite there yet, but that would be gold. And if we look at what's happened to gold, gold has had a decent move back to the downside. This gap is a problem. That's a little bit of a problem. I don't like that at all. But if you consider where we are with the weekly position with gold, we do see that there is some support along here, and we're right on top of that particular level. Now, this would be determined by what happens with the dollar. And it looks like there could be a little bit more of a push to the downside. We're currently at 1938. This level's at 1920-ish. So we could be looking at another 1% move to the downside on gold, which would be absolutely fine, and this would still be a place to pick it up. But it does look like a long, even with that gap down there. And you can see on the weekly chart another 3-bar pattern, which is also a morning star here. Look at that push down. This bar here, which suggests a hold, and then the big push up, creating a morning star, closing well above the first bar's range as well. So that's a very bullish signal, and the buyers really stopped buying just where we are on top of here as well. Another push up with a tail, so it was weakening there. It did attempt to break out, but it has started to come down pretty hard. This week might be a week that we need to see it hold. It may not be the week to get in, because as I say, dollar tends to come down next week, so we've got a little way to go, and gold tends to rally next week. So gold looks quite interesting. at this particular point. So assets like gold, assets like oil might be okay. We'll see. We'll see what happens with oil. I'm kind of on either side with oil because seasonal data suggests one thing, fundamentals could suggest another after the OPEC report. So we'll have to see what happens with the OPEC report. But I'm not comfortable. So on a personal view, I prefer not to trade it at all because it's not that clear. But I think it really could go. If I had to, I'd prefer to go long because of the price action, where the price action is, the buy zone. Now, if we look at the Aussie, another really interesting one, because the Aussie is also managed to come down. If we look on the daily chart, it's also kind of hit this buying area, pushes down over the last 4 sessions from this high. So we managed to get up to this point here, up to this point there. And we came right back inside that range. So we're kind of back inside the range, but you can see, hopefully, that there's also some there's a trend line that's running right the way along down here. And we've basically pretty much tested that area, and we've tested this zone here. And this bar has got a fairly convincing looking tail. So this is suggesting some upside as well. And there's even a little trend line here if you extrapolate out that point there. So there's, the body kind of gets stuck in that point. Let me blow it up for you a bit. The body gets stuck of this bar above the trend line. There's the first touch. There's the second. There's the third. This one's back inside. So the Aussie's also suggesting some upside. Seasonally, it's not ready. It also suggests that we could be looking at next week. But if there is a decent enough setup in this area, it might well be worth trying to trade it back up again, because if the dollar does take its seasonal short, coming into the close end of the year, and certainly kind of going into December, mid-December, then this may well break to the upside, and it's much better to try and getting down here than have to wait for the break and rally. So I like the Aussie. The Canadian dollar tends to have a terrible period for against the euro at this particular period as well. So let's have a look at the Canadian dollar, particularly against the euro. That the Swissie's not it's bad against the Swissie as well. But looking at the euro CAD, big problem with this one is that it looks like it's in a sell zone. We consider support or resistance as buy and sell zones. This looks like it's in a sell zone, though it may have snuck through, but not convincingly. So it might need to nestle down a bit. If this can dip back into the range, if it can dip back into this trend line, then we can start looking for some other signal for some upside. But I wouldn't be that comfortable with that initially. I think even though the seasonals are for upside on the Euro CAD, the price action's just gone a bit early. So it might be seasonals might be a bit out of whack. So I wouldn't be that interested in this position, but I would be interested in shorting the CAD because I think the CAD may well struggle, due to its seasonal bias, and also due to its correlation with oil. If oil comes down, we can look for some weakness in the CAD. What we pick against it is going to be the key, and it might well be that we pick the Swissie instead of the euro. That is slightly problematic because of where the current position is down here. It's definitely kind of more of a support level, more of a buy zone at this particular time than a sell zone. So not that comfortable. Price action might be a little bit out of whack with what we really want to trade. So it starts to kind of discard some of this stuff. But if we consider, let's have a look at the NASDAQ as well. If we consider a few options, then we can probably start to filter out what we like and what we don't like. And the way I'm looking at it, I like the way that gold has had a decent retracement. It could go a lot further, but there's lots of sort of external factors suggesting a rally in gold coming. I like the Aussie. Because again, we've kind of got that breakout. It's kind of in that zone. There's some external factors which suggest a breakdown in the US dollar. and maybe a bit of a rally in the Aussie. So even though the Euro CAD seasonals are up, there's some other factors on the chart which suggest that they might not be the best price. So that's not so good. We want to watch out for the NASDAQ, because the NASDAQ is also in a pretty strong seasonal zone as we kind of go into the Christmas period. But price action is just a bit overcooked in this zone. We do see a kind of a breakout of this particular area relatively convincingly as well. But it's still looking a little bit overcooked up here. So coming back into maybe the trend line, maybe this horizontal level here on the weekly. You can see it's on the daily, maybe even clearer. That would be okay. You know, you can see that that's had a pretty decent test and a rally to the upside. But as I say, looking a little bit overdone here. Very aggressive moves to the upside. Bad news on the dollar. And if CPI does weaken, no question, we see the dollar come down. Probably the NASDAQ get another boost. It seems to be the most correlated, highly correlated to the opposite move in the dollar right now. So if the dollar comes down, then the NASDAQ's probably like to get another boost to the upside. So we've got to watch out for that one as well. So at the minute on the watch list, I would say gold, the NASDAQ, WTI because of the OPEC meeting, maybe for a short-term rally, and of course the dollar. And then we can start kind of thinking about other things, and the Aussie as well. Aussie is something else that I'm watching out quite closely for. We need to watch copper as well. So copper, again, you can find on TradingView. Copper, what we want to see with copper is this rally with gold. We want to see but both of these commodities move in tandem, and you can see that there's a trend line right there that we look like we're hugging at the minute. Now, we might be able to tighten this up. Let's have a look. I'm looking for the most touches. Now, there looks like a touch there and a touch there. So that one's not so good, though. Could be there, but it looks like it's relatively close. Little boost to the upside, and I've seen a move to the downside, not that convincing. I mean, on Friday we did see a relatively convincing bar, but right at the end of the day, you can see there was a little rally to the upside. So we might start to see copper, and we want to see copper rally. The big problem with copper is it's also associated with growth. Global growth is weakening, and this isn't boosting the price of copper particularly convincingly. So maybe some reduction in CPI data, seeing that dollar come down, could see copper go up. I wouldn't trade copper, but I'd like to see it as a barometer for what we've got for some upside. So I'm gonna watch out for copper. I'm going to watch out for what happens with gold, obviously the Aussie, and I'll be watching also for the FTSE, because the FTSE is going to be pretty. This one out of most of the indexes is the most susceptible to the business cycle, and because we've seen so much global contraction, the FTSE's really suffered. But the bar on Friday, look at that, and what we got going on here is, and it's a difficult pattern, this, because if we consider this as an accumulation pattern, a push to the downside and an attempt to get back higher again, a push to the downside, creating this trough down here, then a big bull bar there. Now, when we started pushing back down again, there was some decision making to be going on here. Bit of buying, kind of failed to get back up again. Again, some decision making on the next day, decision making the next day. Then it attempted to kind of push high, but again, a bar with a tail and another bar with a tail. So there is some decision making going on down here. But what I quite like about the FTSE is, as we've seen the NASDAQ go to the upside and the FTSE not yet follow it, and the S&P, incidentally, another one with a decent rally on the S&P. So we've seen the US shares and US indexes start to rally, but we've not seen the same with the FTSE. But this signal might be just enough to suggest that there is a rally coming into year end, which it does tend to do. So we do tend to see stocks rally to the year end. These big moves down here have almost created a bit of a gap where there are buyers in this area that have not yet been able to get out. You know, there's just been this this long squeeze as this just collapsed. So there are people still in this market in these particular position in this particular position, wanting to get out. So around this area, if this kind of comes up here around about the 18th of November, that's when we might start to see the FTSE fall again. But this looks to me like a decent potential for that rally. Now it's very volatile down here, so it's not going to be an easy market to get involved in. But if we kind of have a look at what's going on with the price action, talked about the morning star a few times. Here's another one. Push down on the 4-hour. Push down here. A beautiful hammer. This is a lovely low test bar here, hammering out the low. Decent move to the upside, but the fact that it's closed right on the open of the first bar of the 3 is a really bullish signal. So I like the FTSE, and I quite like it down here. It's not a great inverted head and shoulders, but it's starting to look like, almost like this cup and handle pattern. And it's one of those that, it really doesn't matter what these things are called. It just matters how we perceive them. But look, that looks like a cup there, and it looks like we've got this handle kind of going on here. And if that is a cup and handle scenario, this is a bullish pattern down here. So I like the FTSE, and I think if oil can get a boost, if copper can get a boost, because it's very commodity driven, then because we've got the likes of Anglo American on the mining side, we've got the likes of BP and Shell on the commodity side. If those two commodities get a boost, which may well happen, then they're much more likely to see the FTSE rally. The Nasdaq will probably rally, but the price point doesn't look as good. The FTSE could rally, but the price point looks a lot better. When it's down here, when everybody's kind of concerned with what's going on, it's usually sort of not a bad area to try and get in to the market down here. So the rally on the FTSE tends to kind of come on the 21st of November. So we're going into that particular period relatively soon. So I'm going to look out for that as well. So we're about to wrap up, but if you guys got any questions or any comments you'd like to make? Thanks, Sam. If not, then I am going to just share with you just the information about the trading extravaganza, which is happening. And this is Wednesday, 6:30. Oh, LS, I'll get to that. Yeah, I'll get to that. Let me just talk about this now. I'm on it. We got trading extravaganza Wednesday, 6:30 till 9 Singapore time. Where you will have some top quality speakers coming in. We got Adam Phillips from Morris Capital. We've got Andre Adams, High Performance Coaching. That's an interview. We've got Ainsley Otterman, so some new product strategy there. Simon Williams talking about some cryptos and what's going on with the crypto market, which could be a fascinating discussion actually, because if you still believe in the crypto market, there is a situation next year with Bitcoin's halving, which we could be at the start of a bull run. So if you're going to get into cryptos, now looks like a decent time. So it'd be interesting to see what Simon's saying about that and what he's saying about our timing for that. We then have Orlando Gutierrez talking some premium trade calls. George and Baza talking about some price action and creating an apprentice, which should be fascinating stuff. And Gordon Scott, of course, the guy that writes the CMC exams, is also going to be at the trading extravaganza. So there really is a bumper set of speakers. So 6:30 till 9 Singapore time on Wednesday. Now, LS, silver. Let's talk about silver. Now, silver is similar in many respects to what we think about gold, and the movement in silver could be equally reflected in what's going on with gold. But the difference with silver is that silver is a commodity that is used. It's something which not it is not only a not only a hedge against inflation because it's a precious metal. It's also something that is used, relatively closely, but with the market, with products and services and all that kind of thing as well. So if we think about when silver tends to rally, the rally in silver doesn't really, the big rally in silver tends to be in around about July. Yeah, I think silver is going to be a tricky one. Now, the thing about silver, it's a great market to trade because it's so volatile. So you do get some really good movements, but it's problematic because of its correlation with growth, which is different to gold in many respects. You sort of you don't always see the two of them move in tandem because those silvers are precious metal. It's got another functionality because of growth and production. Now, what we've really seen, if we kind of like really come out with silver and see what we've got going on, let's look at the weekly. If we think about what's been happening to silver, there's problems on the chart with silver because looking at this looked like a rally into this area that attempted to stay above the area, but now it's below. So any move back up into the line suggests that we might even get another move to the downside. I've got to say I quite like silver over the longer term, but the seasonal rally doesn't tend to come until the end of November. And for right now, it just looks like it is just all over the place. And I probably wouldn't touch it personally until the end of November, and until we get something a little bit more convincing. Looks to me on the dailies that we're in a bit of a. I mean, this doesn't look bad here, does it? But it's also looking a little bit no man's landy. It looks like a buy zone area, but it also looks like there's another potential push down there. If this is a buy zone, it comes up there and then maybe collapses down again. So I wouldn't touch it this week personally, LS, and I would really consider with some of these charts. When is a good time? When is a good time to really kind of go into this stuff? Because the reason that trading appears easy or simple at sometimes and not others is the market is just the right type of market. And I've got to be honest, I personally think that we're in a bit of a period of quite a tricky market, and silver looks quite indicative of that. I see a few different conflicting patterns here, which could suggest upside or downside. As I say, the seasonals are out of sync for right now. It does suggest that we might get a couple of weeks where things just get chopped around a little bit. Same with the dollar, to be fair. But if the dollar is to weaken, as it does tend to, all of the other asset classes should rally against it. Should, don't know for sure, but they should. But what I'd like to see is the dollar weaken first, then start to look at something like silver, and probably look at silver, as I say, towards the last week in November for some upside. I don't think I'd really want to be trading it at all right now, because it's just kind of a bit all over the place, and I don't like the zone. And I don't want to wait. I wouldn't want to make hard work for myself. You're welcome. Do you know what it is? It's that sometimes we try and find meaning in a chart where there is none, just because that's what we tend to sort of gravitate towards. But actually, sometimes it's better to wait until the right period, then find the meaning, which does become a lot clearer and find it easier to trade that particular market. So my personal view on silver right now is that I just don't think I could comfortably trade it because I would find it quite difficult to call. I think overall I'll be bullish, but in this exact period, I don't think I could call it. So that would be my view. But thanks for the question. I really appreciate it. Okay, so we're wrapping. So I will be there Wednesday as well to do some chart pattern interludes. So I might see some of you there. If I do, look forward to that. If I don't, have a great week, guys. Protect your capital and do as much work off the chart as you possibly can so you're ready for next week. Have a great time. See you soon.